Turn pain to progression in every studio session. Turn pain to progression in every studio session. Turn pain to
Welcome to Pain to Progression with Regis, Arzu. Money management for the rest of us. Now, who's the rest of us? If you don't vote because you believe the system is stacked against us, you are the rest of us. Now, I want to say, yes, the system is indeed stacked against you, but I want you all to know that your vote does count. Your vote does matter. It's that state of mind that lets them win without even needing to rig the voting system. Go vote. Whenever there's a chance, use your voice. That's my PSA. Go vote. Okay, so it's that time of the week where I introduce you to someone new. Someone that grew up like you did and went through the same similar struggles that you're going through now, or maybe have gone through in your past. But this person found some way to not be a statistic. This guy grew up in Inglewood, California, and proved that we don't have to end up the way they want us to. Yes, Inglewood. The Inglewood that you heard Tupac, Snoop, Kendrick Lamar talk about. The Inglewood that they made movies about. But this is a special interview. It's a double whammy. Yes, I said double whammy. Not only will Bryant Pryor tell us about his financial journey, but he's a mortgage loan officer. And he has been putting people like you and I in homes for almost 15 plus years. Today, we're lucky to let him give us some insight in the mortgage world. Now, without further ado, here's Bryant Pryor.
All right, so how you doing, Brian?
Good. How you doing, Regis?
I'm doing pretty good. So there's a lot of questions, so we're going to jump into it. This is going to be a two-part, so we're going to kind of jump into your life, but then also want to jump into your expertise as a mortgage lender. Okay?
All right, sounds good.
All right, so let's start with the questions. Tell me about your financial upbringing, and how was it?
I mean, it had its ups and downs. Came from a two-parent home. Both parents worked. Mom worked early in the morning. Dad worked in the night. So due to scheduling, sometimes I was home alone with a lot of the kids, kind of getting in trouble and whatnot. So I had older siblings, but they weren't there that often. Born and raised in Los Angeles, California, and also Inglewood.
How was your environment?
I mean, it's, kind of like how you see it in the movies. Typical LA. It was like that, sometimes worse. You had a lot of distractions, a lot of things going on in the city that could lead you down the wrong path. A lot of poverty, a lot of systematic oppression, gentrification. I mean, any and everything, growing up, like you see in movies, like Boys in the Hood, just how, it's a system pin against you and you have to try to figure your way out,
So you feel like Boys in the Hood was fairly accurate to the environment?
Yeah, definitely. Yeah, just based on the things they were talking about in the movie. They're talking about systematic gentrification, how they try to push the prices down in certain neighborhoods. In every neighborhood, every corner has like a church, a liquor store, fried food, things of that magnitude. You saw it everywhere.
How was there any hardship, like financially, with your family?
Yeah, we kind of, we had our struggles, just like any other family. But I mean, like I say, both parents were employed, but I'm sure that, there were rough times. Like, for early part of my life, we definitely rented, and we weren't in the best of neighborhoods. So, we had friends, family, murdered or, it's just tough kind of making it through bill-wise. My dad was very frugal, and he was good with his money, so he taught me a lot of techniques and tips early. I didn't necessarily listen to him back then, but as I got older, I saw the wisdom in his words.
So what changed from your state of mind when it came to, like, you didn't want to listen to him to when you felt, okay, wow, what my father is telling me is making sense and I should start doing things a certain way? Like, what was the turning point in your state of mind?
So I had an older brother. He's like 15 years older than me. He went to college. A lot of our family members didn't go to college. My dad didn't go to college either. He took the trade school route, but just his mentality and the way he spent and saved versus everyone else in the family unit, whether it be aunties, cousins, and uncles, they always seem to go through a hardship per se, or they just weren't as good with their money. And our lifestyles were a lot different. I was able to participate in things as a youth that kind of kept me out of trouble. I have a couple cousins that are currently incarcerated, that have got killed, things of that magnitude. So I think the little nudge you gave me and wisdom kind of set me on a better route to keep me out of trouble. And it, I got to see the different side of things. I wouldn't say rich dad, poor dad, more like, rich dad, poor cousin, or poor uncle, because you could just see the difference in what he was telling me and the way other family members were living their life. It kind of made a big difference.
So kind of digging into your father, like what made him have that different state of mind?
He came from the South. He's from Alabama. He had 7 brothers. And they grew up on the farm, so they knew about hard work. So for them, opportunity was coming to California from deep down south to get away from segregation and other things. He wasn't, like I said, he didn't go to college, but he read a lot of books, and he was always good with his money, and he always kind of taught me different gems and jewels about always save 10% of everything you have, so you never know what's going to happen. Things of that magnitude, and it kind of, as you're coming up as a kid, you get your first job, you don't know, you don't think about that. You always have like a cushion, or sometimes you can fall back on your mom or dad. In a lot of cases, he let me kind of fall because he had already given me the information, and, your best teacher is living through it or having that experience. So those are things that I kind of learned real quick, like, hey, if he wasn't here, I'd be in a bad situation, or he told me so. So I was able to, he kind of made sure I went through that early, so as I got older, or in college or out of college, have a living example.
Okay, so that's a fairly good transition to the next question. What would you say is your lowest financial moment?
2008. I had been in the mortgage industry 3 years at the time. I had my first son. Second son was just born. And we had like that mortgage meltdown in '08 where, all the mortgage companies kind of went under, stopped lending, stock market crash. So like I said, I wasn't really able to find work or maintain it just due to there not being any work available for the industry. So I went from making decent amounts of money to making little to no amount of money, for a 3 to 6 month period of time. So it was a rough time. Kind of like what we're going through now, but basically a different indicator. Not coronavirus, more of just a stock market crash or something global.
So I want to dig in a little bit more. So how, if you're okay saying it, like how bad did it get for you? Like, did you guys have like no money, or was it just you just?
Yeah, I ended up having to sell a property and live off that money. I ultimately moved in with my parents for 3 months. Things got better eventually, but it was just one of those things. Like, my industry as a whole was shut down. Like, there was no options or nowhere to go. No, yeah, we ended up spending like whatever I had saved in 401k, all of my commissions pretty much. It got bad, man. Like I said, moved in with my parents for about 90 days until I could kind of figure out everything and recover.
All right, so the opposite of the question is, what was your greatest financial moment? Like, when did you realize, man, I made it to a point that I never thought I'd be, and I'm blessed? Like, when did you realize that you were blessed?
Say like 2011. I kind of got back into my groove, back into mortgages, and I was making money. I was able to basically become debt-free, paid off all student debt, paid off the car I had at the time, had 0 balances on credit cards. And it was, like I say, it was a total 360 from what I was, 3 or 4 years prior to that. It was just a feeling of freedom. I could accomplish anything. All the money I make, I can keep. It wasn't earmarked to go to pay certain bills, or you just had a feeling of freedom, and the world was at your feet. You could accomplish or try anything without having to worry about, being broke.
How was the route to that? Like, was it really hard to just pay all that stuff off, or just?
The route was, like, honestly discipline. Like I said, since I had ran out of money, and I was at that time making decent money, I really didn't trust, I didn't trust spending. I wasn't comfortable buying things that I didn't need. Like how, designer clothes, Jordans and all that. I wasn't comfortable anymore buying that at that point. So all the money I did receive, figured out, how to keep it, or I only spent on things that I felt would make money or were a necessity. So it wasn't really anything extra, and I started budgeting. So, entertainment budget, shopping, clothing, groceries, eating out, things of that magnitude. Because, when you start losing money, you don't have any, you go back and look at your bank statements and you're like, man. So I noticed that I was spending a lot of money, entertaining or going out or eating out. So that was the first thing I started to reduce.
So budgeting really helped you out?
Yeah, budgeting was the key because it let you see how much you were really spending. So like, if I was spending, let's say $800 to $1,000 on groceries, but then spending double that on entertainment, restaurants, going out, partying or whatever, there's a disconnect there. Like, I already showed that I have food at home, but I'm spending double or more on something frivolous that's never going to make a return. So I cut that down. Like, I may go out to the movies once a month or once or twice a quarter, or maybe eat out once a month, not every weekend, or, although, if you spend, if you save $20, $30 a day, that adds up. I mean, that's hundreds of dollars a month over the time. That's thousands of dollars in a year. And you look at that like, wow, I could use that money for something else. So once I started changing the trajectory of how I spent, all that additional money was able to go to debt. So instead of blowing $2,000-$3,000 a month going out, I put that on a credit card balance and kind of use different techniques to pay those off. And then once I paid it off, I just left it alone or cut it up or put it to the side and then kind of moved on to the next. And, 2 or 3 credit cards later, you're out of debt. And then you focus on maybe your car loan. If with that extra money you have, you can pay towards your insurance premium or start paying towards make an extra payment. Then your interest goes down, your principal balance is going down. 2 or 3 years later, now you're out of debt. You don't have anything else to pay, so now you can pay yourself. So those are just different things that I started seeing that started making sense of what my father was telling me. I mean, save 10% of everything you make. Like, you can use that 10% for something else, or just save it for a rainy day fund. Then you start saving, your expenses. If your total expenses for everything a month is, let's say, around like $2,500, save 3 months of that. Have an emergency fund, then start doing 6. So once you're out of debt, you can start making those kind of moves without feeling the pressure.
Okay, so I think you talked about it a little bit, but I'll just ask straight up. Like, what is the best, and maybe I'll break it down to 2 parts because it seems like your father was the best. He gave you the best advice and guided you the best way to where you are now. So what is the best advice that your father gave you?
Basically, every time you borrow money, you're robbing your future self. So, a lot of people, they apply for these credit lines. That money's not free. It has to be paid back plus more. Every time, you swipe that credit card and you can't pay it off fully before the month's end, you're going to pay that plus more. So credit can be your friend, but a lot of times it's not unless you know how to use it.
So every time you borrow money, you're stealing from your future self.
Yes.
Nice.
Oh, and then he just said it's not how much money you make, but how much you keep.
Nice. So I don't know if it's the same, and if it is, then just let me know. But what is your advice for my audience? Anyone that's looking at your life and is like, man, I want to be debt-free. I want to be in a position where everything I make goes to me.
I mean, figure out, basically budget, to be honest. Figure out how much you're spending and where you're spending it, and then change the trajectory of it, change the direction of how that's being spent. Cut back on frivolous things, or, I'm not telling you not to live your life, but you can do it in moderation until you get to your goal.
Nice. Perfect. Thank you very much for that. So, I want to tap into your other side of your world, or your main career world. You're a mortgage loan officer, so your expertise is mortgages. So I want to ask kind of a few questions just specifically on the mortgage side of things. So let me just jump in. What is the best advice that you can give to people that have never bought a home?
The best advice is it's not as hard as you think. It's a process. It's actually easier than buying a car, in my opinion. Because a car, they're trying to make a profit, they rip you off. Sometimes you don't feel like you got a great deal. The housing process is a lot different. You have a realtor that's usually banking on your best interest, trying to negotiate the best price for you. So, like I say, it's not as hard or scary as you think, but it does take a little bit of preparation. And once you buy a house, you want to buy another one typically. That's just the feeling I get. So it's not as hard as you think it is once you kind of get into the mix of everything.
Nice.
And you don't need 20% either. Those are the old days. It's great to have 20%, but it's not required as it once was.
What's the lowest percentage as far as down payment that someone can put in their home?
There are banks and credit unions that will let you buy a house for 0% down. You basically pay the closing costs. Typically, closing costs on average are usually $2,000 to $3,000, just depending on different products and programs. But there are 100% down. There are down payment assistance. A lot of those have shrunk as well due to COVID-19, but there's some great ones like Chafa you can buy with as little as $1,000 down or 1% down. And you do have down payment assistance. I know B of A can give you up to 10 to 17,000 down towards your house. There's another company I just recently found out called Landed, Landed. They can give you 15% down towards your purchase. So if you put 5% down, they'll cover the other 15.
So this sounds amazing. It actually sounds too good to be true. Either 0% or 15,000 given to someone to purchase a home. So let me ask you, like, how often have you done mortgages that sell within that range for these programs?
It just depends on the scenario, but I have done them. They are real. You know, it's not a scam. A lot of it is positioning. On the mortgage, you have credit positioning. So basically, the higher your FICO is, the better rate and pricing you qualify for. So some of these loans, like the 100% down, you have to have a 700 minimum FICO because you're not putting down any collateral. If you don't have that, then if you have a 620, there are some 100% products where you're getting 2 to 3% down. But keep in mind, usually the lower your FICO, the higher the rate. And a lot of times 0% down isn't the best option because you have to look at your payment. So a lot of times that's the only thing that matters. We don't care what the rates are doing, whether they're high or low. If you can't afford the payment, then it's not going to do anything for you or you're not going to be able to stay in the house. So payment is everything when you're purchasing your home. Make sure it's affordable. Make sure it's something you're comfortable with because you don't want to get into any situations where you can't afford it down the line. So typically, the more you put down, the lower your payment is going to be.
And just to elaborate a little bit, by FICO, you mean credit score?
Yes, FICO. And in mortgage, there are 3 different credit bureaus. In mortgage, we take the average, not the highest, not the lowest. We take the mid score. So if you have a 720, 650, and a 600 score, we'll go price you based on your 650, the mid score.
And then these programs, are they state by state, or is it just overall within the United States?
Yeah, every state has different funding. I mean, there's a lot of statistics back in 2018, there was like $35 million left untouched towards down payment assistance that no one used. So you can just Google whatever state you're in and down payment assistance or DPA, so acronym for down payment assistance programs. Every state has them. Some are better than others, but that's the easiest way. You can see what banks, credit unions, or brokers offer products in association with that. Because in Colorado, we have Chafa. You can literally purchase a house for $1,000 down or less. But due to, like, say, COVID-19, a lot of the funding has been shrunk. So, it's kind of a first come, first term basis. But there are a lot of other different programs you can find out there. Just Google your state and then down payment assistance.
So I'm just curious, what is the lowest credit score or FICO score you closed on a mortgage for?
Me personally, it was 580, 585.
580.
There's another one we didn't talk about, FHA, government funding. You put 3.5% down, and you do have mortgage insurance. Mortgage insurance is basically you're insuring the mortgage because you're a liability if you don't put the 20% down. So typically loans that have less than 20% down, you incur a small additional cost on top of your mortgage, your principal, interest, and insurance. There's mortgage insurance. That's another discussion, but there is a government program, 3.5% down, and then you can go down to like a 580. Sometimes it's lower, but the lowest I've done is 580. There are some brokers that target those lower FICO scores, but keep in mind the lower your FICO or credit score, the higher your rate can be.
Right. And I think you mentioned a little bit, but what's the lowest down payment you've done a mortgage for?
I've done 100% financing. They paid around $2,000, the closing costs. But that was just closing cost. Yeah, they didn't. But that was, to buy a house, $2,000. I mean, that's a tax refund, basically for a lot of people. So it is true. It is available. It is an option.
Okay, that's awesome information. So, what is the best advice you have for people that want to start the mortgage process or the process of purchasing a home?
First thing is to figure out where you are financially with your credit scores. Like I say, it's kind of hard with a lot of these like Credit Karma and all those other companies. Those aren't FICO scores; those are Vantage scores. Basically, just kind of a snapshot of what it is. Those are not going to be accurate, though. Typically, when you come into a bank, the score you see on your Credit Karma is not going to be what we see because it's a different method. There's hundreds of different algorithms for credit scoring, so it's kind of hard. But typically, if you go through your credit bureau itself, opposed to a third-party app, you'll get accurate scores. But that's the first thing: figure out where you are with your credit scores. Secondly, any collections you have, try to negotiate or get rid of those. Because a lot of times, depending on the type of collection, sometimes they make you pay those off if they're over a certain amount before you close on the mortgage because it looks like it's a liability. And then thirdly, you want to have at least 2 or more trade lines. A trade line is basically any account that, someone records payment history like a credit card or an installment payment like a car note. You want to make sure those are in good standing, and you want to make sure you have 12 to 24 months history of that. Those are typically the requirements, to have a FICO above a specific score, specifically 620. 580 to 620 is where you want to be depending on the banking institution you go to. But you want to have that FICO score in line. You want to have those 2 trade lines minimum, and then any monies you do have to put towards down payment. You do have the 0% down, but you want to have something to bring the closing. It does help.
And how strict are they with, I know you have to be in the same field or be in the same job for 2 years. Is that a strict policy?
I mean, it's kind of like they want to make sure you have success or able to keep a job in that industry. So like, if I was an auto mechanic and I switched over and became a appliance salesman, I might not have sales history, so I might not do good at that job or make what I'm supposed to make. So they want to have some consistency in the work history. So if you're a nurse and you just switch hospitals or something like that, that's fine. But if you switch fields, that could be a problem. And never change your work history during the process of applying for a mortgage because that could throw it all off. And never apply for any new credit lines while you're purchasing a home either because that could throw something that we haven't discussed off as your debt to income ratio. Basically, the income you bring in versus all of the money you are obligated to pay every month. You want that ratio to be around 42 to 43% for traditional loans. If it's a FHA loan, you can go up to 50%. But you want to make sure your debt to income ratio is in line as well. There are a lot of calculators online you can look up that show you what your DTI is. You enter all your monthly liabilities one by one, itemize it, and you put in what your gross income is, monthly or yearly, and it'll show you what your DTI is. So if it's a little bit high, you can either pay off one of those bills, pay them off totally, or, pay it down, and that's definitely going to help it because it's all your monthly payments or obligations.
Nice. So thank you very much. This was a lot of information. It was great information. I think this is going to be very helpful and inspirational to people. So my question for you is, where can people get in contact with you if they want to get in contact with you?
They can call or text me at 720-984-2359 or email me at BryantFinance@gmail.com. BRYANTE, the word finance, @gmail.com.
Perfect. And I'll put it on my show notes as well. Thank you very, very much. Appreciate it.
All right. Thank you. Appreciate the opportunity.
Bye-bye.
Okay, guys. Thank you, Bryant Pryor, for letting us hear about your financial journey and bringing us some golden jewels when it comes to the mortgage world. If you want to get in contact with Bryant, I'll leave his contact information in my show notes. All right, my Pain of Progression listeners, Bryant is doing big things, but the goal is for you to realize that there is nothing he can do that you cannot. And now that you know that, what will you do with that information? Now, this information is for you to use, but it's also for you to please subscribe and share on Apple Podcasts. I want you to know that this information is not free of charge. My fee is that you please share this podcast and pay it forward. Let's take this information and flip the world upside down. See you Monday, my P2P Nation. A wise man said, get rich or die trying. Let's get it.